Good morning to you. What do you think here? Is the Fed actually going to slow down?
It's not. The Fed is going to have to consolidate its gains. Yes, gains because headline inflation came in better than expected. They can't celebrate. In fact, you've had a few Fed speakers come out already and say it's early days and we're not going to stop hiking. So I think the Fed is going to welcome the latest print, but it's not going to slow down in any significant manner.
And so when you say not slow down, we're at 75 basis points in your mind, or we're at 50? Because that seems to be the big debate.
Somewhere between 50 and 75, but that's a lot, Andrew, when you think we've already had two 75s. Look, the Fed has had a couple of really good data reports. The jobs report and, of course, the inflation, which suggests to them that they can continue doing what they're doing because the underlying strength of the economy is still significant, and that's important.
So when you think about where we are right now, I mean, there is a view in the equity market right now. You've seen how fast the market has come back. And some people think the train has already left the station. Has it left the station, or is it going to return to the station based on some of your perhaps pessimism about where we really are in the economy?
Okay, so we've had an incredible rally. And the first stage of the rally was all driven by technicals and relative valuations. What's encouraging is that the latest stage of the rally was driven by less worrisome fundamentals. And that's a good thing. That has more legs to it. Looking forward, Andrew, I think it's too early to call the recession risk over. I think there are significant headwinds coming. And the other thing about the inflation number, as much as I and others rightly celebrated the headline inflation, core inflation is still worrisome. It went up. It went up to 5.9%. If you look at the Cleveland Fed's measure of trimmed inflation, that also suggests that inflation is very broad-based. So what you're really getting is the energy prices coming down, and that is what resulted in the zero inflation month on month and the decline to 8.5% in the headline. But the underlying drivers of inflation still remain strong and broad-based. And the PPI number is going to be important in this.
What did you make? I don't know if you saw what President Biden said yesterday, calling it a zero inflation month. And we talked to Frank Luntz about it earlier. A lot of people said just disingenuous and maybe shouldn't be doing a victory lap so soon.
Look, from the data, it was a 0% inflation month. But when you say that to people, there's two problems. One is there was massive dispersion that month. So it was energy and it was gas that really drove down the inflation rate month on month to zero. Other things went up, including food that went up by 1.1%. So people don't feel like it's been a zero inflation. Second, inflation at 8.5% still hurts. And it hurts when it comes on top of inflation being high. So I understand why, on the one hand, it is correct to say 0% inflation month on month. But on the other hand, people say, well, what are you talking about? I'm still feeling the pain. And it just tells you that we're going to have to sustain this progress against inflation. We've got to put the inflation genie back into the bottle as fast as possible.